Hello, this is Dean Malone with Compass FX. This training video is about trading with the Traders Dynamic Index Pro. The Traders Dynamic Index Pro, also known as the TDI Pro, has two basic principles. First, when price and market sentiment align, they're moving together in the same direction, look for a favorable trade in the direction of price. The second principle is when price and market sentiment diverge, moving apart from one another, moving in opposite directions, look for a favorable trade in the direction of sentiment. There are four trade scenarios. Number one, price in the TDI Pro rising between the 32 and the 68 levels, you look to trade long. When price is rising but the TDI Pro is flat or turns down or above the 68 level, prepare to trade short. When price and the TDI Pro are falling between the 68 and the 32 levels, trade short. And when price is falling but the TDI Pro is flat or turns up or below the 32 level, prepare to trade long. It's important to note that when price is moving a direction and the TDI is in alignment with price direction, look for a favorable long or short. However, when price and market sentiment are moving in the opposite directions, watch for price to turn and follow sentiment. So be prepared to take the trade, just don't step into it until there's confirmation that price is following the direction of sentiment. When trading with the TDI Pro, there are four considerations. First, treat the TDI Pro as your trading buddy to confirm or counter what price action is doing, and also to confirm entry and exit conditions when the green and red lines cross over. You can determine positive and negative sentiment as you trade, and also look for bullish and bearish divergence. Now let's talk a little bit about divergence. When price and market sentiment move in opposite directions, this is called divergence. There are two types of divergence, regular and hidden divergence. Regular divergence, we're looking for a reversal in price. We're looking for literally a turn in the market in the opposite direction it's been going. On the other hand, hidden divergence, we look for continuation in price. Now there is a reason why it's called hidden divergence, is because it's much more difficult to see on the chart. But don't worry, the TDI Pro does the work for you and identifies both regular and hidden divergence. So let's take a closer look at each one of these. Regular divergence, what we're looking for is price reversal. So let's take a closer look at this chart. It identifies two types of regular divergence, bearish or negative divergence, and bullish or positive divergence. And this is specifically what we're looking for. For bearish regular divergence, which should be a move short, it's a sell direction, we should see higher highs in price and lower highs in the Traders Dynamic Index Pro. If it is a bullish regular divergence, what we're looking for is a move to the upside, a buy direction, we should see lower lows in price and higher lows in the Traders Dynamic Index. Let's take a look at a couple of charts. When you look at this chart, you can see the two types of divergence. On the left, we have bullish divergence. You can see that we have lower lows in price, but we have higher lows in the TDI. In this case, we're looking for the market to reverse and make a move to the upside. We can see that the TDI comes up, crosses over the red line and continues and finally crosses over the yellow line. We see that occurring in price. Eventually, when price moves up to a certain high point, we have a high and then we have a higher high. But when you look below, you can see that in the TDI, sentiment is shifting. Sentiment is fading long, giving a representation that buyers are no longer buying but exiting their long positions. So we end up with a high and a lower high. This is bearish regular divergence, and we're looking for the market to trade short, and we see that the TDI is coming down. At the same time, we see price making a move down. Here's another example of regular bearish divergence. We can see in this chart that price moved from a high to a higher high, but yet down below we see that we went from a high to a slightly lower high, and the market rolled over, price rolled over as well. And notice also in the TDI Pro, we have a trend display. So we have a downtrend represented by the trend sentiment indicator, and the trade sentiment is suggesting a short trade. The second type of divergence that we have is known as hidden divergence, and we look for continuation of price. There are two types of hidden divergence, like there's two types of regular divergence. We have bullish and we have bearish. With bullish hidden divergence, we're looking for a long direction. We're looking for a buy direction. In this case, we have higher lows in price and lower lows in the Trader's Dynamic Index Pro. Bearish hidden divergence, we're looking for a sell trade direction, looking to go short. In this case, we'll look for lower highs in price and higher highs in the Trader's Dynamic Index Pro. In this example, you can see two types of hidden divergence, the bearish hidden divergence and the bullish hidden divergence. Notice that when we look at this, with the bearish hidden divergence, we have a high followed by a lower high. And in the Trader's Dynamic Index, we have a high followed by a higher high. And you'll see that the market sentiment actually started rolling over and eventually price did as well. With bullish hidden divergence, later on, we have a situation where we have a low and then a higher low in price. But down below, we have a low and then a slightly lower low in the Trader's Dynamic Index. In this case, market sentiment is literally bouncing off the bottom and moving back up. So we see sentiment start to rise, and eventually we see price doing the same thing. Price kind of bounced around for a little bit, but the green line held above the yellow line and held above the red line, and we see this immediate move up. Again, our trend display shows that the trend sentiment is an uptrend, and the trade sentiment is indicating a long trade. Here's another example of hidden bullish divergence, which results in a long trade. We can see that we had a low and then a higher low in price, where here we have a low and then a lower low in the Trader's Dynamic Index Pro, again suggesting that market sentiment has hit a bottom and bouncing back up, and the market follows. So you want to look for that when you trade. Divergence is very key to letting you know ahead of what price is doing. This is where we talk about when price and market sentiment are diverging, moving apart from one another. You want to prepare to trade in the direction of sentiment. Don't look at it as an immediate reversal. Look at it as sentiment is starting to turn and we're waiting on price to follow. This concludes the training video on trading with the Trader's Dynamic Index Pro. I suggest going back over this video and making notes as to where to look for the market to go. Remember, trading with the Trader's Dynamic Index Pro is going to do a number of things for you. It's going to show you when to enter a market and when to exit a market. When to stay into a market as the market continues to move, as volatility is increasing, you want to stay into that trade. Also, the TDI Pro, given divergence, is going to give you a heads up as to when the market should turn. Be aware though that when sentiment is turning, wait for price to turn and follow sentiment before jumping into the trade. Well, this is Dean Malone with Compass FX. Make it a great day and get some good trades with the TDI Pro.